A lot of what we obviously have to deal with today in terms of investing in macroeconomic analysis is understanding what's going on in America and therefore what we describe as the Trump play. There is obviously a book being written, the Art of the Deal, which I haven't read, so I'm sort of coming in new on this sort of thing and just observing what's going on. But I think it's very clear from what we've seen what the play is in terms of the Trump administration dealing with the world. So a lot of the things I know you can read, but we're going through the 5 stages. We're probably somewhere between 4 and 5 at present, and we're sort of stalled a bit from what I read. It's been a very quick journey through April and May, but now we're at the sticky bit of negotiating, particularly with the Chinese, and things aren't going that well. To be frank, they're not moving forward at all. But you can, as I said, you can read what we said. There's been a total disruption to the world order, attacks on everyone, attack on NATO. That started actually 2017, if you go back, Trump won. He said to NATO then, can you start looking after your own defence and not rely on us? Nothing happened under Biden, but we're back there again. And it's good news. When you look at it, there's actually good news that NATO's actually realised that they actually have to defend themselves. So that's actually a breakthrough. And as we'll describe later, that's actually opening up some trade avenues for America and Europe. So there is some logic to that one. In terms of the excessive tariffs, we know it was a negotiation, so they're coming down rapidly. The issue which is significant is as the world pivots all over the place and trade alliances develop, everyone's, or particularly think about Australia, we should be thinking about what's our trade relationship ongoing with China and the Asian bloc. Interesting, when our Prime Minister meets the President in a week or so in Canada, what will they be talking about? There's no way that Australia should disengage with China. And China itself is trying to engage with a lot of other parts of the world. And this interesting part is the Middle East, which we'll talk about, because the Middle East has all the money at present, all the investable capital. Then we have this process of negotiating back and claiming victory, even though nothing's happened. So we're going through that, and then we're into the real issue, which is the massive debt and fiscal problem of America, which Elon Musk has identified in the last week. So it's been nice for the last 91 days. But we do actually have a problem called debt and the fiscal problem. In terms of talking to markets, Besant, who is the head of Treasury, has been assigned the job of talking to the capital markets. He's not talking to the American population, so to speak. One is they don't listen, and two is they can't understand what he's talking about. You have to be a really trained macroeconomic economist like me to understand what he's talking about. So I've actually gone through it and summarised it for you. It's also in your letter, so I don't think you have to take notes. But essentially what he's been saying is China manufactures too much and America consumes too much of what China manufactures. Now I know that sounds like, year 10 economics in school, but that's what he said. Now, to some extent, that's the bleeding obvious, okay? But we've got to this position, not overnight, it's been developing over 25 and 30 years. And the American corporate sector has encouraged this, and the result is highly profitable American multinationals. So it's actually had a result for the American economy through the stock market and profit. He has said that China should no longer be granted developing country status. The argument is they're an $18 trillion economy, America's 32. China is 4 times bigger than the 3rd largest economy, so why are they still developing? Well, interesting argument, but the problem is the per capita GDP is only $15,000. America's 70,000. 15,000 per capita in China is half of what Greece is, okay? So on a per capita basis, they are still emerging, but it's a moot point, going nowhere. The stimulation of Europe is occurring. And as I said in the opening slide, certainly the defence issue, which is being addressed, the target of 3.5% of GDP expenditure, quite a significant amount of money when you work it out, probably, $1 trillion to $2 trillion of investment over the next 2 or 3 years. Very significant. A lot of it coming out of America. So that's some good stuff. And also, as Europe defines its future, it's getting off supply of gas from Russia and probably going to buy it off America, and I'll show you a slide for that later. We've had the shock and awe, and now we've had the observation that really 10% general tariff is where we're heading. That'll have a moderate effect on inflation, but that's the bottom line, unless it's an import which America essentially needs and can't pay any more for. And that will develop in the next couple of months when they're identified. Also, there's the push to bring back American manufacturing. It won't just happen behind a tariff war. It'll need significant capital support in terms of tax write-offs and cutting of red tape. That's what's proposed in the big new bill, the big new fiscal bill, which Trump keeps on talking about. We've had Dodge, I think it's Dodge, D-O-G-E, even though the leader has left the room. They've identified, or Elon identified about, let's call it 200 billion maximum of waste. When you look at 200 billion of waste in the budget of America, what are we talking about? We're talking, if we translated that to Australian budget, that would be someone, Elon coming to Australia. Elon, can you look at our budget? How much can you find is wasted? The equivalent is $15 billion. So 170 billion in America, 15 billion in Australia. Do you think there's 15 billion of waste in the Australian budget? I think you'd find it pretty bloody easily. That's about 2% of our budget outlays. Imagine if we say 15 billion, our budget would be in surplus, or balanced. So yeah, that's the significance of what Dodge is doing, but he's only going so far. He's not going to find a tree, and he's not going to find $2 trillion of savings. And then there's the clanger from Besant, which is the triple threes. Okay, what are the triple threes? The administration is targeting 3% real GDP growth, so that's above inflation. This is not tomorrow, this is what they're targeting probably in between 4 and 8 years. A 3% deficit, which is now 6%, and a 3% inflation rate, which is higher than the current inflation rate in America. So that's the target, the triple threes. And we need to understand and unpack that to work out what that means. So across the world, just starting from America, what's it mean? We've got a stagflation risk developing in America, which is elevated inflation and a slowing economy. They've had negative growth in the March quarter, possibly have negative growth in the June quarter. So despite all the noise, America is not growing. Australia similarly is not growing. We've got the identification by Trump in his first overseas visit. Where did he go? He went to the Middle East. And he spent 3 or 4 days there, picked up a plane on the way through, which was nice. But he obviously had a lot of private discussions with the Saudis, the United Arabs, Qatar, because when you look at the world today, who is creating excess capital? It's them. They've got so much money coming, it doesn't matter what the oil price is, they're making a lot of money, they're redefining their economies, and they've got money to invest. So Trump goes there, a lot of song and dance in publicly, but something went on behind closed doors, and we have to work out what that was. I suspect it was support for the American economy and the American bond market, but we'll get back there. In Australia, very poor productivity, decline in standard of living, real wages going backwards. So quite a sober situation in Australia, not getting any better. As soon as someone asked me as I walked up, how are we going to fix it? Very easy to get productivity up. Maybe we just let 1 million people die and maintain the GDP of Australia. So on a per capita basis, GDP would go up. I was only joking there. I know you looked at me blindly because you're talking about me. No, it wasn't. But it's all about mathematics, We need to get more people working and less people not working. That's essentially that. And productively working. The RBA is totally focused on the gearing in the housing sector. Everything else is nonsense. Yes, they pay lip service to inflation, but did they actually help inflation come down? No, they didn't. They did nothing. Inflation came down because of cost of living. And in the Fair Work decision last week, where 3.5% was granted, the Commissioner actually said they acknowledged the cost of living relief in the budget when they came to their decision about what wages should go up in. So after a year or two of denial by the RBA and a whole lot of, I call them quack economists, cost of living relief is very important in managing inflation. And it's still important. So we've still got the problem with energy today, energy costs, petrol prices, still a major issue. China responds to US tariffs, so a whole lot of new alliances. We have to watch this space. China is out there aggressively. They were doing it anyway, but now they're more on the front foot. And when we look at trade between America and China directly, it hasn't really grown in the last 3 or 4 years. China's is a problem, but it's not the main problem for America. It's everyone else getting together as America becomes isolated. India looks well positioned. I've said this before. So an economy which is doubling every 6 years, 6 or 7 years, will likely continue that trajectory for the next 20 or 30 years. A massive opportunity. probably accessed by American multinationals. So they must be scratching their heads saying, well, actually, we want to deal with India, Donald. We actually want to engage with them. It's our big opportunity. But Mr. Trump hasn't worked that out yet. Europe is sort of now coming out of its sleep. It's been in a coma for 15 years since the GFC. Went into a deep coma during COVID, but we can understand that. Now it's being shaken to its core, and it needed to be shaken to its core to get going. So some growth in Europe is good news for Australia in terms of commodity prices. So a little bit of good news there. And then we've got Japan, who's, I don't know, it's sort of like it's come out of a deep sleep, and now it's just sort of sleeping. Okay, so it normalises interest rates. But it's nothing really to be concerned. People say, oh, interest rates going up in Japan. I go, what from? Nothing to 1%? Really? Are you worried about that? I'm not. Okay. So let's have a scan across the world and see if we can build on what we've said as we open these remarks. The world is now a $115 trillion economy. So we need to keep that in focus. In the last 10 years, the growth engines of the world have been China and India, and coming up fast behind is Indonesia. So we're talking about 2.6, 2.7 billion people becoming mobile in economic growth. And where do they reside? Not far from Australia. So Australia's come to the door and saying, do we actually want to engage with America, where we're talking, single billions of exports, or we want to engage with these people, we're talking hundreds of billions of exports. It's a real issue. Throughout the period of the 10 years, America grew 38%. Not bad for an economy which has been running trade deficits and fiscal deficits, okay? So what Trump says, that trade is a problem for America, actually is not shown by the figures. America's done fine and done much better than the majority of Western economies. So trade has been good from America, not bad. As I said, the economy of America has gone for a downturn. You can see the orange. I am colourblind, but I just assume it's orange for me. That big negative, that's the trade, that's the import surge, which happened in March. That's where big American corporates were obviously tipped off by the administration. You better fill up your stock, you better fill up your warehouses and get as much stuff in from China as possible, or from Asia. And they did. And from an economic point of view, that drives the economy negative in terms of readings. It's a technical type of issue. So the economy was probably growing, but is being dragged down by that measure. The real problem, as I said when I went through in the opening remarks to Trump, try and avoid talking about the real problem in the room, the real elephant. And this discloses quite clearly what the elephant is. So you've got two lines, they look positive, but they're negative. So that's a negative going up, okay? So just remember that. So what is growing in the American economy is the fiscal deficit. That's the light green, or light blue. I'm not that blind. Light blue, that's dark blue. That's your trade deficit, which if you look at it over time, hasn't really got much worse as a percentage of GDP. What's got worse is the blue. Now, if we ignore COVID, which was an aberration, and we go back 10 years, the fiscal deficit of America has gone from around averaging 2% to now 6%. If we had a 6% deficit in Australia, our deficit would be about $160, $170 billion. And we would be panicking. We would be absolutely panicking. America just gets on with business, but time is up. And I think what the Trump administration, whether you like them or not, is what they're bringing to the fore is a major problem in the American economy, the funding of the government, the funding of fiscal policy. It's out of control. They've only had 2 surpluses in 60 years. But they've never had a record where the deficits have blown out like that, and there is no clear path to rectifying them. The big act in front of Congress and Senate now makes the deficit worse, hoping that it gets better by America growing. The deficit year to date is well over $2 trillion run rate. The forecast by Biden was $1.9 trillion, but we obviously have some issue about whether he was awake when he did that forecast, but it doesn't matter. But the Trump has picked up and the deficit's running at 10% worse than forecast. So with the outlays and receipts, so outlays going up, receipts coming down. So we're talking about current run rate, $2.1 trillion deficit. So debt continues to grow. So the IMF forecast suggesting that US and UK debt, but particularly US debt, continues to rise as their deficits are unmanageable. And it's interesting who's done the first trade deal with Trump. It's UK. And it's almost like you I don't want to be rude, but you invite an ugly relative to come over who's got the same problem as you do. So the two ugly relatives get together, and apparently Trump rang up the Prime Minister of the UK while he was watching the football and said, how about we do a deal? So okay, let's do a deal. It was that well planned? No, it wasn't, okay? But these two countries have got a major debt problem and they get into bed quickly. Everyone else is back here saying, well, hold on, we don't actually have the same debt problem you have or fiscal problem that you have. So we're less inclined to come rushing over to America and doing a deal, okay? So let's be very clear, and particularly Australia is not in a desperate situation at present. The deficit has got worse. This is the trade deficit, but it's not China. If you look at China, from when Trump was last in office, it's about the same level. Now, you will say to me, but that's direct trade, and you're right. There is some trade going through in Vietnam and Cambodia, Thailand, which is diverted, so secondary deficits, no doubt about it. But the actual issue with China is not as significant as Trump has said. China's trade deficit helped America grow. China's trade deficit and supply helped American corporates become highly profitable. And we'll talk about that right at the end before I give you the weather forecast, okay? Okay, so the rest of the world is interesting. It's blowing out. And that does include supporters of China. In terms of the developing world, the BRICS, it's not a very, ex-China, there's not much going on. So if you look at Brazil and India, big economies, United Arabs actually has a trade deficit going into America. There's not that much of an issue, yet a lot of his targeting in his Liberation Day was against these emerging economies. The best thing for America is the developing world continues to grow and demands American developed product. Didn't say American manufactured, American developed product. That's the best thing for America, okay? The fiscal situation's another issue, okay? We'll get back to that. In terms of China and the direct imports into America, don't know if you can read that, but electronics and machinery, toys and games and textiles are your major culprits, okay? Nothing really has changed, but the electronics one is quite significant, $140, $150 billion deficit. And what makes up that? Probably Apple iPhones and iPods and stuff like that, iPads, would be a fair slab of that, okay? And we know that the iPad or iPhone, there's been a whole lot of discussion about it, but China manufactures an iPhone. The base manufacturing is only about $50 an iPhone. It's a long way away from the wholesale and retail prices. I put this up as just a bit of a quandary. So I've got the heading EV market iPhones and a question mark, because it sort of suggests to you, I don't know what I'm talking about, but I actually do. So what this shows you is the development of China's electronic vehicle manufacturing capacity. That's the light green, okay? So from nothing, so obviously it had to come from nothing because we didn't have EVs 15 years ago, so we all started from nothing. Then Elon Musk developed the concept. He exported the manufacturing to China to some extent when he realised the Americans couldn't manufacture an EV car as cheap as China did, and he supported these factories. China has taken that sort of stimulation and that thought process and a little bit of capital and turned it into a major export industry in electronic vehicles. Okay? So there's an example. Okay, so that's what's happened in the last few weeks. Trump has gone to Apple and said, we want you to bring home the Apple iPhone. We want you to manufacture in America. Now, if you were Apple, you'd be going, first of all, we can't make it work in terms of economics, but do we really want to vacate the Chinese manufacturing market, leave highly qualified manufacturing capability in China and say, we're leaving, we're going to manufacture in America, and we're going to leave your manufacturing vacant? What do you think China would do with that capacity? They would compete. They would create what I call the Mandarin phone. I thought that was funny, but you obviously don't. So Apple iPhone, Mandarin phone, yeah, you get it? Yeah, you get it, okay. So there's no way Apple will vacate China manufacturing. It would be opening up their back door. And if they do, you'd have to sort of say I'm out of Apple shares. You'd have to, and that's one of the major 7 companies of America. That would be the first domino to fall. So watch this space. To Trump, so I'm trying to be balanced here. There's no doubt that tariff revenue has been very low and declined for the last 100 years in America. I think it's down to about 2 to 2.5% of revenue of the government. Very high historical percentage. Imports, very low coverage. I think it's less than 10% coverage on real imports coming to America. So something probably had to be done. Maybe not so much for trade, but to try and help balance the American budget. And time will tell how much is collected from these tariffs. $500 billion would be a good start. But that's $500 billion paid by American consumers. It's like an import GST. I don't know whether Trump understands that. He seems to think that the American corporate sector will eat it and not pass it on. They're already passing it on. They haven't even been charged with it yet. So, you know, it doesn't work, and we're going to have an inflation issue there. Australia, when we sat down, and like everyone else, we were entitled to panic a little bit when these announcements were made. But it takes about a week to get all the facts, so we sort of, you know, made some adjustments to the portfolio. There was some opportunity to buy things, and certain things were clearly going to be contested. However, things have settled down now, and reality set in. Australia is not directly affected much by these tariffs. China is, Vietnam is, China not to a significant extent, but Vietnam, Malaysia, Thailand, Singapore, so some of our trading neighbours, it's the residual effects, it's the knock-on effects which are more significant to Australia, which we have to watch. Now, I said earlier about European and American relations, what is developing. We are seeing an opportunity, which is America's jumped on in exporting gas, LNG, to Europe, particularly Germany. And the development of America's gas industry has come dramatically quickly, so they're now in a point where they've got excess supply over their internal demand. That opens up the export market. I guarantee to you that they'll be making money on that for American capital, in contrast to Australia, where we export to the world and don't make any money on it. Quite amazing, but that's another story. Concurrently, America is going to potentially supply itself fully in oil. Now, it may need the help of Canada in that one. I think they will, cross-border. But North America is becoming self-sufficient in oil and over-sufficient in gas. That's actually good news longer term. Whether they, and Garth might talk about this later, I heard him talk about it in Melbourne, the issue, or in Brisbane, the issue is American production of oil is about a $60 cost barrier there, so we have to watch that one. The cost of debt, long-term debt, is stabilising, but this is measuring it against inflation. So we had a period, and I remember talking to you, where it's sustained periods, particularly coming out of COVID, where cost of debt was well below inflation. Stabilisation's occurred, now cost of debt is where it should be, you know, a couple of percent above inflation. So that's good news for the world, not good news for America. America would like the cost of debt to be below inflation, okay? Now that only occurs in a dramatic period where there's intervention in the market, and when I go to the forecast of what's going on in the world, later in the program I'll tell you about where we're likely to go with quantitative easing. America cannot afford 4.5% bond yields. Okay, we look at its budget, okay? And the reason is simple, its debt to GDP is 120%. If it's paying 4%, it's paying 5% of GDP on interest, and the budget's around 25% of the GDP. So they'd be paying 20% of their budget in interest at 5%, 4.5% to 5%. So it's a big issue developing, so something has to come in. Okay, what may come in? I'm going to give you a hint, okay? Tomorrow's looking interesting, okay? Tomorrow's weather's looking interesting. Now, Besant made a comment, and I picked it up. I told my team at our investment team, I saw this interview about 6 weeks ago at the IMF, where Besant was talking about his life as a hedge fund manager. Not a great hedge fund manager, by the way, so don't get too excited about him, but he's highly intelligent. Most boring person I've ever listened to, but he's highly intelligent. And he made the comment that he met the Prime Minister of Japan in 2012, Abe, just as Abe was inventing Abenomics. And he said, and he didn't go into detail, I was quite impressed with the way the Japanese were handling their massive economic problem. And it was a massive problem. They had debt to GDP of over 200%, government debt. How did they address it? They printed a lot of money. They were already printing money, but they turned the printing presses 100 times faster and virtually bought up all bonds in the market at that point, all issuance of bonds, to the point where the Japanese central bank today owns 52% of all the Japanese bonds on issue. Okay, 52%. And some of the maturities they own virtually 80%, long dated bonds. So they really crunched. And remember 10-year bonds in Japan went to -1%? -1. Similarly in Germany, -1. Switzerland, -1. Now we just watched in amazement here and didn't think about it. I suspect that tomorrow's weather is going to include some very strange bond yields because of that. American central bank owns 20% of American bonds. Okay, 52, 20, 25% of American bonds are owned by foreigners. And in the last week, this American administration saying, part of the cabinet saying, why do we have any foreign owners of American government bonds? It's beginning to start the thought process, okay? Just thought I'd put up rare earths, not as Donald Trump says, raw earths, it's rare. It's rare. But, obviously we don't have Ukraine appearing on that screen because they've got it underground, haven't developed it yet. But Australia, I put Australia to US, we've got a conversation happening in the next 2 weeks between our Prime Minister, and this will be on the table. Will they help us dig this stuff up, put it in a big pit somewhere or a pile, and we'll keep it for them in the future? What a great strategy. So we'll just have a stockpile or something, another stockpile in Australia. Okay, so that's up for negotiation. Where does Australia fit? We're not bad. We're a long way behind China. We're about 15% of them, and we're number 4 in the world. So that's an opportunity for Australia's future if we can work out how to do it. I said earlier about expenditure in NATO for defence. I mean, outrageous statements made a week ago by the head of defence or whatever he was in America, saying that an imminent attack of Taiwan is coming. Imminent. I mean, what an outrageously stupid statement. But he did it for a purpose to try and stir up people like Australia to spend more money on defence. Has no basis in fact. And when questioned on it, he said, imminent means 2027, I think. Well, that's not imminent. And the Chinese, of course, said it was rubbish, which everyone knows it's rubbish. If Taiwan falls to China, it will be an economic fallover like Hong Kong. It won't be anything other than that. It's quite obvious. But is it really a concern to us? Don't think so. But NATO is spending a lot more money, and that's good. That's manufacturing, that's demand, that's for commodities, that's for copper, all good stuff. Now, let's get into the storm clouds for Australia. And I've been unashamedly optimistic for Australia in terms of our possibility for trade, engagement with Asia, and coming behind that tailwind. It's not happening. Yes, we do have a trade surplus with China and most of Asia, but we're not translating it into wealth. And what is going wrong? Anyway, we can pinpoint that Australia's standard of living has declined since COVID. How? Cost of living is up 25%, wages are up 15%. There's a 10% gap appeared. So standard of living has fallen concurrently with productivity. In terms of why productivity is falling, because Australia is growing for 2 major reasons. One is immigrating, printing people. So we immigrate 1 million people over 2.5 years, no plan. Why do we do it? Well, because it seemed like a good idea. We just do things on the spur of the moment, a bit like superannuation tax, let's just do something. But the other reason why productivity is falling is because the stimulation of the economy, if that's the word, by the government sector. Government sector is emerging dramatically in Australia as the driver of growth. And governments don't actually manufacture much. They don't actually build much. They service. And we've got a growing service industry, which is not bad, but it's excessive. Services doesn't produce, it meets a demand. It doesn't produce something for the future. And Australia's got to disengage itself and have some sort of manufacturing and development plan away from this massive growth in government expenditure, which is now hitting 27% of GDP, at long-term average around 24, 25. So that's pretty big It's about an 8 to 10% increase in the government sector size of GDP. Okay, so what is happening in GDP? And it's come out in the recent numbers. Australian economy is growing at a very low rate. This goes back 30 years. So apart from COVID, we're growing at the slowest rate in 30 years. And even when we had the GFC, we had growth. You know, we didn't really get hit. We panicked, like everyone else did, but our economy kept on growing because China stimulated. So we've got lower growth today than the GFC and lower growth today than we had when Keating, I think he called us the recession we had to have. So this is an appalling situation. The reason we have grown, apart from government, as I said, was the surge in migration. Why did we bring in 1 million people? Oh, because we went backwards during COVID and someone in Canberra said we have to make up for it. We have to make it. What's the logic of that? Why would you do a make-up immigration? Why wouldn't you just take it back to where it was and say, well, we don't need to make up that 2 years because we weren't doing anything in the 2 years. And what we've done is created excess demand in the economy, particularly in housing and services. Because we didn't spend those 2 years getting ready for 1 million people. Remember, we all sat at home and sort of playing games and punting the steer market and all that because it was fun. In Melbourne, they were locked up for 18 months. They weren't doing anything to meet the demand of immigration. So that's a catastrophic misstep in economic management of Australia. And we're all going to wear it. Our kids are going to wear it with housing costs, and we're going to wear it because all of a sudden the government realises we need more tax. Okay, guess who they're coming after? The other issue, as I said, for our children and our grandchildren, this diabolical chart, which has occurred since COVID, is the escalation of housing prices against the cost of living. So I told you the cost of living has gone up more than wages, but when you put in the housing costs, it's an astronomical gap, and that's why the Reserve Bank of Australia is totally focused on gearing into the housing market. That's their focus. I really don't think they care whether inflation is 2% or 3%. They need to get the cost of debt down so people who are borrowed can afford to pay off their mortgages, and we don't tip the economy into some sort of financial issue, because that would be terrible for Commonwealth Bank. Yeah? Terrible for Commonwealth Bank. 80% of their business is lending to people, probably half of them can't afford to pay it back. Half of which are living in a house they can't afford to live in. And that's the biggest stock in Australia. So I'm not saying Commonwealth Bank's a problem, just as I'm not saying Apple's a problem in America, but there are big issues in the background and we have to watch what we do, okay? So we have a well represented in this room. Do you want to swing the camera around, George, and take a picture? No, just joking. You know, we are asset rich and income poor. And if you think you're income poor today, you're going to be a lot poorer in the next 5 years. And that's going to come in my weather forecast coming later in the program. Because there's no doubt America has to do something dramatic to interest rates to get its cost of servicing debt under control, and it's going to go across the world, as it always does. It always does. The American bond yields direct traffic around the world, and Australia will be caught in that. So we have to be aware of that. But today, we are asset rich. Savings is beginning to creep up again, which is interesting. I saw this morning. So who's saving money? It's the retirees. Who's spending money? It's the young household, young families. Every dollar they have, paying back debt and trying to survive. And my last chart before I bring on Garth is just, I've been talking about this for years. We are raising way too much money in super, hard to believe. Government has a very uninformed discussion regarding super. And you know, so they only tell you about 1% of the issue. The other 99% of the issue they avoid. That's a legacy issue. But what's happened is we've raised our superannuation to over $4.25 trillion is, well, we have nothing to invest in. The industry funds don't want to build houses for social needs. That's the last thing on their agenda. So what do? They just go and send it offshore, and 70 cents in every dollar has been going to the American economy, a bulk of that going to the American stock market. So we have a long-term investment strategy which is based on America, and they're now being told by American administration, we have a debt problem, guys. We have a budget we can't service. We have $34 trillion of debt. We welcome Australian super funds coming in and bailing us out, so long as you understand what the problem is. I think it's a wake-up call for us for investing. I'm not saying today, and we'll get back to talking about America later, it's not about bailing out of America in terms of directing investment there. It's being rational in where we invest. You know, really invest in the growth part of America, because there's going to be a growing poor part of America as it tries to rectify its debt situation. This massive investment, this is where we used to import equity as a country. Now we're exporting equity as a country. Exporting equity. You know, why are we doing that? Because we haven't got a leadership which says, look, that $4 trillion is going to be handy for our future and our grandchildren. We don't think like that. Let's give it to American grandchildren. Anyway, that's the end of me for the weather today. Interesting, cold, gloomy. But what's tomorrow? You know, they always say tomorrow is going to be a better day. Let's find out later. But I'll hand over to Garth to give you some observations of what the markets are doing.